7B covered journals and ledgers, but in a twist from 7A, it was looking at balance day adjustments for revenue, whereas 7A was looking at balance day adjustments for expenses. And that was because the question changed from looking at it from the standpoint of Mars Petroleum, which was what 7A was about, to actually looking at it from the perspective of MGH Motors. So we need to, again, recognize what actually happened in this question. So one business agreed to sell cars to another business, but they were to be used for advertising purposes. So Mars Petroleum gave this business money plus GST, however they didn't get the cars. What was going to happen was they were going to call those cars advertising, run some ads on TV saying win a car from our business, and then when a customer won a car, they were going to give them that car. So what we looked at in 7A was we said, well, for MGH Motors, they got money, they collected GST, but it's not revenue, and we had to call it prepaid revenue, which is a liability. And the reason why is because the business not only has the money, but they also have the cars, so they haven't actually earned any of that revenue yet. Whereas for Mars Petroleum, they paid money, they paid GST, but they hadn't actually incurred advertising yet because the customer hadn't, or their customers hadn't actually got the car for winning the prize. So what we did is we called that prepaid advertising, which is actually an asset. So what we're asked to do now is from on the 17th of October and 24th of October, a car is delivered by MGH Motors to the winning viewer. So as in, 2 cars were given from MGH Motors to Mars Petroleum, who then gave them to the winners on the tally. But for MGH Motors, what we can see now is that this liability has now decreased. They did owe $300,000, but they've now earned $120,000 of it. So there were 5 cars at $300,000, which is $60,000 each. So 2 cars would be $120,000. So we're going to call that revenue as sales, which would be the name of the ledger. And what will happen is the liability will decrease by the same amount. They don't owe Mars Petroleum 5 cars anymore. They only owe them 3. So we better decrease that ledger by $120,000. So we need to do that in the general journal. So we would have done a debit to prepaid revenue, and we would have done a credit to sales of $120,000. And a ration was not required, so we didn't need to give one. Looking at the marks, 1 mark for prepaid revenue debit and 1 mark for a credit to sales. Looking at the average here, this is probably the worst question on the exam in terms of the average and the percentage of kids who got 0. So clearly people just didn't understand this question. If we had said to you, can you record the earning of a prepaid revenue? Most kids could do that pretty easily. So obviously the problem was in understanding that this was actually a prepaid revenue being earned. And once you did that, as we can see, 28% of the state could. It actually wasn't all that difficult. Looking at the examiner's comments, they didn't give a lot for a question that had such a low average. But basically they said some students found the task of accounting for 2 different businesses a difficult process. And what they mean there is in 7A, you actually had to do this transaction from the perspective of the other business, not for MGH Motors.